there are people out there who think that, we're going to have a soft landing, recession's canceled, that I'm pulling this out of my arse, that I'm making this up, that I'm just a perma bear, blah, blah, blah. All I can say to them is they are not paying attention. And there's a clue that backs me up on this, and that's the unemployment rate. If they were right, unemployment would have already spiked. Unemployment, if, like, for example, people think that this is the bottom of the stock market right here. They think that that was the bottom. They're like, hey, we already had a big crash from, the all-time highs down to this right here in November 2022. That was a 27% crash, and that is a decent size crash / correction. It's decent. I'm not saying that's nothing, but I don't think that's it. And the proof that that's not it is, let's look at unemployment right then. So I've got my cursor, now line it up, now look down, employment's right here on the bottom. It's at its lowest. It's at its absolute lowest. Right there, it's like 3.65 or 3.6. It doesn't get lower than that. Now that doesn't make sense, because every time historically you've had a crash, like look right here. My cursor is on the crash of 2009, the housing bubble crash, and look at unemployment. It's 2/3 or 3/4 of the way up to its peak. It's rounded and it's going up. There's like a surge of unemployment that's not yet over, but it's on its way. And same with 2000. You have an increase of unemployment that has occurred. It's not at the bottom. When we're at the bottom of unemployment right here, that's when we have the peaks and the tops and the blow off tops of the market. So for anyone, I want to hit this home, like anyone who tells you that this is the bottom of the stock market, this is the S&P 500 right now, they are wrong. I would say 98% chance, because the unemployment, it was at its lowest. That's like a euphoric level of unemployment. It doesn't match. Now, on the other hand, if unemployment was like going up like this and it was like up right here, it was at 8% or 10% or something other than the lowest range, and then we made this low, I would be like, yeah, okay, that could be the bottom. That could have been it. But we haven't seen unemployment increase. Now, why do we need to see unemployment increase? Well, what's the Fed's stated goal? Is bring down inflation. Well, how do they bring down inflation? They fuck us. Well, that's the short term. They bring down inflation by causing mass unemployment. Pardon my swearing for those family audiences. They bring down inflation by causing mass unemployment and by, putting companies out of business. I mean, that's literally what they do. I mean, my friend actually said this to me yesterday, and it rings true. He's like, basically, they make us pay for their mistakes. And it's so true. They printed too much money in the first place. They caused the massive inflation. They overspent their budgets. That's their bad. They should have stayed within their means. So now I'm not even touching the fraud that's involved, where the money went, but they did that. And then we have prices that go through the roof. That's the first punishment. And then second of all, the Fed raises the interest rates because now they have no other tools other than screwing us. And now we lose our jobs. Our companies go out of business. We can't afford loans. We can't buy houses because the rates are too high. It screws every sector of society. And all of us, we didn't choose to have them print all that money. So we pay for the mistakes that they made. And basically the Fed and the government makes us personally pay on a personal level and basically steals from us in the form of that hidden taxation, which is inflation. I guess I'm getting on a little bit of a podium here. But anyways, so this is why unemployment is important, because the Fed has to increase unemployment, as they've stated overtly. They're not hiding this fact. If they don't see unemployment go up, then their job is not over, essentially, is what they're saying. And so they're plateauing interest rates right now. They're detecting weakness in the markets. And proof of that is that unemployment is at 3.8 right now. You can see right over here, 3.8, which is a slight uptick. If you kind of zoom out the chart here, let me do it by monthly candles so you can see it a little better. See that on the bottom here, right below my cursor? You can see how it's curving and it's going up just a little bit. That is the sign that they're kind of looking for. And they want to see that continued a little longer, hence why they're going to hold rates flat for longer. But we're getting there. Like I said, everything is going according to plan from what I have predicted and what I've seen historically. It's happening again. Anyone who tells you this time is different is frankly wrong. The Fed is like play by play doing the same playbook that they did last recessions. It's happening again. And last crashes. They're repeating the exact same playbook. So yes, that is my lengthy explanation for why the bottom is not in. This is not the bottom because the unemployment rate has not climbed, and also the Fed has not reduced or lowered the interest rates. You need to have interest rates back down to zero, which itself is a bearish event. It's counterintuitive, but it actually it's probably because the market has so much damage caused to it by that point that even though the Fed is panicking when they drop it down to zero, they're going, okay, we've caused enough damage. Quick, drop it down to zero fast, save the markets. But by that point, it's too late. I need some water here. But I think you get the idea. So that's my recap on the stock market and why the bottom is not already in, why the Fed is doing the exact same things they've done before. And I called this 3 months ago. I called this 5 months before that. And it's happening play by play as expected. So I expect to see another 6 to 12 months minimum, that range of flat plateau interest rates, Fed funds rate. I expect to see the yield curve continue to uninvert. And it's not to say that it can't even go lower. Like inflation is sticky. We could see another bout of inflation. And if that happens, the Fed is going to perhaps raise rates further or hold longer. And that is part of the territory of inflation. But I think that that's the minimum case is like the Fed continues to hold and the market feels the pain and more companies are starting to go out of business and something is going to break. Well, things are already breaking slowly behind the scenes. Like you're having unemployment go up and you're having companies go out of business. Like WeWork just went out of business and it was a multi-billion company valuation and then now it's like tens of millions. It's crashed utterly. And that was a huge corporation. Things like that are going to continue and they will accelerate. And I personally predict there will be some massive bank failures coming on the horizon in the future as well. So just stay tuned and there will be some shocks. There'll be long periods of kind of lull and lower high, lower low, lower high, lower low. And then there'll be precipitous crashes that happen all suddenly when like Charles Schwab Bank goes broke or Wells Fargo or whoever just goes bust. And that'll be the next scare. And the FUD will fuel that leg down. And we'll probably have several of those on the way down to the actual bottom of my target zone here, which we'll see if it's correct. But I think directionally, this is definitely what I'm expecting is something down here. And bottom's not in. So there you go.